Welcome to Srihari's lessons. Hope you enjoy your time here. Continue listening and supporting. Hello friends. In this chapter, let us start our discussion about accumulation journey. This is going to be more of an introduction to accumulation journey. More focus will be on how to approach accumulation along with what we are going to discuss in future chapters. This will remain part of an individual's life from the moment they start getting surplus, that is income more than their expenses, and continue until their lifetime. What should one do once they start getting surplus? First thing is to ensure the surplus is consistent. Consistency here does not refer in any way to the quantum or periodicity. Consistency is more about the process consistency and regularity. Once the consistency is ensured, you have to look for correct tools where you can place the money to generate income from that surplus money and grow the surplus. There are innumerable tools to make money from money in this world. At the same time, one has to be very careful in choosing the tool that is most suited to them based on their circumstance. Selection of the correct tool involves lot of aspects like returns, risk involved, time frames, individual circumstances, to name a few. We have earlier spoken about business income and non-business income, and the ability of the business owner to see the difference between the two streams. To put it simply, as mentioned in earlier chapter, business income is purely active income involving your time and efforts. The surplus we are discussing in this series is non-business income, or in other words, personal income. It is quite simple because this series is about personal finance. When a business owner has surplus money, according to me, the first choice of putting that money should only be their own business and their business expansion. However, that should be done only when you properly analyze the factors of risk and returns involved. This is my personal opinion, and decision has to be taken based on individual circumstances. As we have said, business management, business decisions, business financing is not covered in this series, and those aspects can only be discussed in a separate topic. However, if you as a business owner decide not to put your surplus money into your own business, or you are left with more money than what is required for the business, then there is nothing wrong in placing your money elsewhere and generating some passive income through other money generation tools. In such a scenario, this chapter and subsequent chapters in this series shall be useful for business owners as much as non-business people. As we have seen in earlier chapters, the financial journey and one general goal for many people is to keep reducing dependence on active income and increase or fully depend on passive income. However, business owners need a careful analysis before deciding not adding more money in their own business and leaving the money in somebody else's hands in order to generate additional income. I have added this paragraph specifically to clarify that own business is one of the tools or avenues for putting your surplus money to generate more money, just like any other accumulation or money generation tools in this world. Own business gets initiated by many people for many reasons. Maybe out of their passion, maybe to apply the skill sets, bringing certain goods or services to people, or making life of society easy, or bringing new technologies to the society, or make things affordable for the society, or many such things. Meeting these objectives cannot be done free of cost, right? That way, making profit is part and parcel of doing business along with meeting any of these objectives. That profit shall be shared by business to whomever is participating in achieving the business goals. That way, for the purpose of this series about personal finance, let us look at own business as one of the tools of generating money and not worry about meeting or managing other objective mentioned for commencement of business mentioned here. Now let us come back to accumulation journey. We started by saying surplus money has to be put in for making more money, and there are innumerable tools to do the same. When choosing the tools, one has to clearly plan what the destination of this money generation is. It may be to generate retirement income, it may be to generate money for specific goals like marriage expenses, it may be towards higher education of children. Now whatever this destination is, for each individual, the destination will have a very strong influence on where you put your surplus money. Out of the many criteria used in analysis, there are three most important elements of analysis in the process of choosing your money generation tool. One is returns expected. Second is risk involved. Third is time frame available. The goal based or destination based clarity will influence all three of these analysis elements. Let me give an example. Let us say you are planning to put $10 per month. Let us say the destination or targeted destination is expected at $1,000 at the end of 5 years. This translates into applied surplus of $10 per month, totaling $600 in 5 years. From that 600, you expect to have $1,000. That means your tool has to generate $400. This is just an example using easy numbers. The return expectation, risk involvement or time frames in this example is too far away from realities. Don't worry on those aspects, just take this example to understand the influence of these three elements in your analysis and decision making. Another important element in analysis and decision making is the channels or modes used for putting money, like directly by you or through an agency, and who that agency should be. We will discuss a lot in future about all the financial markets and participants, which will give you diverse understanding about this element. Next important element is data analysis, which will in itself involve a lot of sub-elements like using historical data, future predictions, statistical tools, like etc. Since we have mentioned about risk involvement in all of these tools, there should also be an element to cover for or protect against that risk. This is called hedging in financial terms. One more thing, I have consciously avoided using the word invest in this chapter. Please refer to my meaning of investment in our earlier chapters. Here I want to re-emphasize that meaning and ensure what we are discussing is not about investing, but actually about generating and accumulating surplus money which shall be used by you towards meeting your future expenses and reach financial independence. Going forward, in future chapters, we will discuss about all these elements involved in analysis and decision making, all the tools available for putting your surplus, three most important elements in analysis, all the channels or modes available for each money making tool, and managing all these in your accumulation journey. With that, I'll close this. We will see in the next video. Thank you. Welcome to Srihari's lessons. Hope you enjoy your time here. Continue listening and supporting.